Are you sitting down? Good. Because we need to have a serious, unfiltered, and deeply honest conversation about your money. You have worked hard your entire life. You saved, you sacrificed, you did everything you were supposed to do so that one day you could stop working and finally enjoy your golden years. But right now, as you approach retirement, or if you are already there, a massive storm is brewing, and it is a storm fueled by fear. The fear that you are going to outlive your money. And the absolute biggest threat to your nest egg isn't the stock market. It is not inflation. It is the silent, devastating partner you forgot you invited into your retirement, the Internal Revenue Service. I hear it from people just like you every single day. You ask me, Susie, how much tax am I actually going to pay when I retire? I'm not working anymore, my income is lower, so my taxes will just disappear, right? Wrong. That is the single most dangerous illusion in American personal finance today, and if you buy into it, you are putting your financial security in severe jeopardy. Let's get real. The problem isn't just that you will pay taxes. The problem is that you have been led to believe your retirement accounts are entirely yours. You look at your traditional 401k or your traditional IRA statement, and you see a beautiful number. Let's say it says $500,000. You feel safe. You feel proud. But I need you to look closely at that number and realize that a massive chunk of it does not belong to you. It belongs to Uncle Sam. Every single dollar you pull out of a traditional retirement account to buy groceries, to pay your mortgage, or to take a vacation is taxed at ordinary income rates. It is treated exactly like a paycheck from a job you no longer have, and it gets worse. The fear that keeps so many retirees up at night is the dreaded tax torpedo. This happens when your retirement income triggers a chain reaction that you never saw coming. You think you're just withdrawing a little extra money from your IRA to fix the roof, but suddenly, that withdrawal pushes your total income over a strict threshold, and boom! Now your Social Security benefits, which you thought were safe and tax-free, are being taxed up to 85%. On top of that, your Medicare premiums suddenly skyrocket because you triggered a high-income surcharge. You didn't just pay tax on the IRA withdrawal, you unleashed a financial domino effect that destroys your monthly cash flow. It is devastating, it is unfair, but it is the reality if you do not wake up right now and plan for it. How do we solve this? How do you take control so you can look forward to your future with absolute peace of mind? It all comes down to understanding the rules of the game. Let's look at how the government actually views your retirement income. First, you have tax-deferred buckets, like your traditional 401k and IRA. Every dollar out is fully taxable. Second, you have tax-free buckets, like a Roth IRA or a Roth 401k, where the money comes out completely tax-free because you already paid the tax up front. Third, you have taxable buckets, like regular brokerage accounts, where you pay lower capital gains tax rates on the growth. Your goal, starting today, is to create a master plan for how and when you pull from these different buckets. You cannot just blindly withdraw from whatever account is easiest. You must be strategic. If you are entering retirement, you need to look at tax bracket management. For example, look at the current federal income tax brackets. If you are married filing jointly, you can have a taxable income up to a certain amount and stay firmly within the lower 12% tax bracket. If you blindly pull out too much from a traditional IRA in a single year, you can accidentally kick yourself into the 22% bracket, instantly handing a massive, unnecessary raise to the government. Here is your absolute, non-negotiable, actionable takeaway. I want you to sit down with a qualified tax professional or financial planner, not next year, not when you turn 73, but right now. You need to look into a strategy called Roth conversions. If you are in the gap years, the years between when you retire and when your required minimum distributions, or RMDs, force you to take money out of your traditional accounts, this is your golden window of opportunity. You can systematically move money from your traditional IRA into a Roth IRA. Yes, you will pay taxes on that money today, but you will pay them at today's known tax rates, which are historically low. By doing this, you permanently shrink the size of the traditional IRA that the IRS can touch later, you protect your Social Security from being heavily taxed, and you build an armored shield of tax-free income for the rest of your life. Please, listen to me. True financial freedom is not about how much money you accumulate. True financial freedom is about how much money you get to keep. Do not let taxes torpedo the retirement you spent decades building. Take action, manage your tax buckets, protect your security, and stand strong in your financial power.